Chapter 24. Parastatals and Public Enterprise Accounting. Contents: 1. Purpose. 2. Parastatals and public companies. 3. Sources of income of parastatals. 4. Expenditure. 5. Main objectives of setting up corporations or parastatals or public enterprises. 6. Accounting in public enterprises. 7. Classes of government enterprises. 8. Audit of government enterprises. 9. Accounting policies of corporations. 10. Types of accounts. 11. Hospital accounting. 12. Sources of revenue. 13. Development and property corporations. 14. Chapter review. 15. Worked examples. Parastatals and public enterprise accounting. Purpose. After studying this chapter, the reader should be able to A. Discuss the enabling act that establishes a parastatal or a public company. B. Itemize the objectives of setting up public enterprises. C. Explain the accounting requirements of public enterprises. D. Discuss the sources of income and types of expenditure of public enterprises. Parastatals and public companies. Parastatals and public companies are agencies established by government for specific purposes. Examples are corporations, boards, and public companies. The characteristics of parastatals or corporations are outlined thus. A. Corporations are special organizations set up by government with the aim of carrying out certain projects or performing beneficial services to the nation. Examples are the River Basin Authority, which was set up to enhance the agricultural benefits of the river basins. The National Electric Power Authority in NEPA, now Power Holding Company of Nigeria (PHCN), for the generation and supply of electricity to the citizens at subsidized rates, and the Federal Environmental Protection Agency (FEPA), aimed at safeguarding Nigeria's environment. Most of the corporations are not-for-profit organizations. However, some of them are to recover their operating costs and make some margin or surplus. B. Each corporation or parastatal has its own enabling act. This is the law setting it up, and will show in detail the following. 1. The name of the corporation, its functions and objectives. 2. The principal officers of the board, their functions and mode of appointment. 3. The supervising ministry. 4. The place where the head office and branches of the parastatal will be cited. 5. The organogram of the organization. 6. The source of funds to the parastatal and the type of accounts they are expected to keep. Parastatals or corporations are usually not governed by the provisions of the Companies and Allied Matters Act Cap C20 LFN 2004. Hence, a corporation's name will not end with the word limited or public limited company. C. State and federal governments are free to set up their own corporations after due processes. Such parastatals, boards, or corporations are quite different from the ministries. Ministries and extra-ministerial departments have the same accounting system, unlike the boards and corporation. Government regulations which apply to the ministries may not be applicable to government agencies. The term parastatal also refers to a government company, board, corporation, or a tertiary institution such as the Lagos State Polytechnic, University of Nigeria Nsukka, or Ahmadu Bello University. D. All corporations have supervising ministries. Regulations passed by a corporation are called bylaws. The supervising ministry and government approve the following for a corporation before they become operative. 1. Increases in the price of goods and services delivered. For example, the Federal Ministry of Aviation would approve any price increase by the Nigerian Airways before it is implemented. 2. All the bylaws. 3. The corporation's annual budget. 4. Any major foreign agreement. The supervising ministry recommends the appointment of the managing director or general manager, executive director, and key officers of the corporations to the President or National Assembly for approval. Sources of income of parastatals. Although corporations are set up mainly to render social services to the public at the least possible cost and are principally self-financing, the appropriate government makes funds available to them in form of subventions. The money given to a corporation by the government is income to the corporation and is usually classified into recurrent and capital grant or subvention. Expenditure. All corporations incur expenses such as the payment of staff salaries and maintenance of facilities. The expenditure incurred is either revenue or capital in nature. Most corporations depreciate their assets using appropriate policy. Main objectives of setting up corporations or parastatal or public enterprises. The following are the main objectives of setting up parastatals. A. To bring the means of production under public ownership. B. To avoid high prices of goods normally charged by the private sector. C. To avoid duplication of facilities. D. To ensure close government control over certain key sectors of the economy. E. To ensure the survival of the industries. F. To avoid the imitation of goods. G. To enhance the standard of living of the people. Accounting in the public enterprises. The nature and structure of accounting in the public enterprises depend largely on the scope and objectives of setting them up. The accounting structure will thus vary from one enterprise to another. Despite the differences in their structure and objectives, any accounting system set up for a public enterprise should be able to A. Provide detailed financial information adequate for policy formulation. B. Facilitate extraction of relevant financial statements which comply not only with the requirements of the enabling law but also the needs of the information users. C. Accommodate changes that become necessary. And D. Facilitate the work of the auditors appointed to examine the books of the enterprises. Financial statements. The financial statements of an enterprise are expected to comply with the normal accounting standards in operation, requirements of the laws regulating the activities of the enterprises, etc. For public-making enterprises, the financial statements will include A. Statement of financial position. B. Statement of financial performance. C. Statement of changes in net assets or equity. D. Cash flow statement. And E. Accounting policies. And F. Notes to the financial statements and other disclosures. However, for the not-for-profit making public enterprises, the financial statements are expected to include A. Statement of financial position. Statement of financial position is a statement that shows assets, liabilities, and net assets or equity of an entity. Both assets and liabilities are categorized as current and non-current in the statement of financial position. Current assets include the following. 1. cash and its equivalents. 2. Receivables. 3. Inventories. 4. Prepayments. 5. Other current assets. Non-current assets is made up of 1. Loans granted, that is receivables. 2. Investments. 3. Infrastructure, plant and equipment. 4. Investment property, plant and equipment. 5. Intangible assets. Current liabilities include 1. Deposits. 2. Short-term loans and advances. 3. Unremitted deductions. 4. Accrued expenses. Non-current liabilities is made up of 1. Public funds. 2. Long-term borrowings. All the above subgroupings as a minimum requirement must be disclosed at the face of the statement of financial position. Assets are, however, treated in the financial position net of all provisions, while details are disclosed in the notes to the financial statements. B. Statement of financial performance. Statement of financial performance, that is income and expenditure accounts, shows income accrued to the entity from all sources and expenditure incurred during the period. As a minimum requirement, the face of the statement of financial performance should include the following line items. 1. Revenue from operating activities. 2. Surplus or deficit from operating activities. 3. Finance costs. 4. Share of net surpluses or deficits of associate and joint ventures accounted for using the equity method. 5. Surplus or deficit from ordinary activities. 6. Extraordinary items. 7. Minority interest share of net surplus or deficit. And 8. Net surplus or deficit for the period. The expenses are classified either by nature or by their function within the entity. If an entity decides to classify expenses by function, it must also provide a presentation by nature of expenses in the note. C. Statement of changes in net assets or equity. Net assets or equity simply refers to assets less liabilities. Net asset or equity is financed by reserves, accumulated surpluses or deficits, minority interest, etc. The statement is important in GPFS because it enables users to ascertain causes for movement in net equity of an entity. Changes in net asset or equity is therefore normally caused by significant changes in accounting policy, correction of prior year's errors, revaluation of the assets, surplus or deficit for the period, changes in currency translation, etc. D. Cash flow statement. Statement of cash flow is one of the statements required by IPSAS 1 to be presented in the General Purposes Financial Statement (GPFS). The cash flow statement identifies the sources of cash inflows, the items on which cash was expended during the reporting year, and the cash balance as at the reporting date. The preparation and presentation of cash flow is covered by IPSAS 2. Cash flows are basically reported under 3 separate activities as follows. Operating activities. Activities of the entity that are not investing or financing activities. These are day-to-day activities of an entity. Investing activities. The acquisition and disposal of long-term assets and other investments are not included in cash equivalents. financial activities. Activities that result in changes in the size and composition of the contributed capital and borrowings. E. Accounting policies. Accounting policies are the specific principles, bases, conventions, rules, and practices adopted by an entity in preparing and presenting financial statements. They are part of the financial statement. Entities should select and apply accounting policies so that the financial statement comply with all the requirements of each applicable international public sector accounting standard. F. Notes to the financial statement and other disclosures. Notes and other disclosures to GPFS are additional information presented in the GPFS to enable users understand the financial statements better and compare them with those of other entities. Notes include narrative description or more detailed schedule or analysis of amounts shown on the face of the statement of financial performance, statement of financial position, cash flow statement, and statement of changes in net asset or equity, as well as additional information such as contingent liabilities and commitments. IPSAS has not specifically provided formats for preparation of notes and other disclosures to the financial statement, but as a minimum requirement, notes are normally presented in the following order. 1. Statement of compliance with IPSAS. 2. Statement of the measurement basis and accounting policies applied. 3. Supporting information for items presented on the face of each financial statement in the order in which each line item and each financial statement is presented. And 4. Other disclosures including contingencies, commitments, and other financial disclosures and non-financial disclosures. Non-financial disclosures include 1. Domicile and legal form of the entity. 2. Nature of the entity's operations and principal activities. 3. Reference to relevant legislation governing the entity's operations. And 4. The name of the controlling entity and the ultimate controlling entity of the economic entity, where applicable. Classes of government enterprises. Public enterprises are establishments owned either partially or wholly controlled by government. They come into existence through the promulgation of appropriate federal or state laws. Government enterprises may take the following forms. A. Public utilities. These are parastatals providing essential services to the citizens, either at nil cost or at subsidized rate. This is to bring about proper balance between social and economic objectives. B. Regulatory agencies. These are government agencies or partially autonomous establishments executing general policies of the government within specified areas. Examples are National Communication Commission (NCC) and Nigeria Copyright Commission. They may be fully or partially commercial in nature, although they still look forward to government's financial assistance in meeting their obligations. C. Commercial enterprises. They are bodies established by government in line with the appropriate laws of the country to create competitive environment and make profit from their operations. Government-owned companies are usually in different sectors of the economy, such as mining, banking, insurance, manufacturing, trading, and transportation. Such companies are autonomous in structure and operations. They are incorporated and must comply with the existing laws. The laws governing their operations include the Companies and Allied Matters Act, Cap C20, LFN 2004, Insurance Act of 2000 as amended, the Banks and Other Financial Institutions Act 1990 as amended, and Bankruptcy Act of 1979 as updated. Audit of government enterprises. The laws setting up most of the federal corporations states that A. An internal audit department should be established. The department should audit the corporation and copies of reports forwarded to the Auditor General for the Federation for information only. B. The accounts of the corporation must be verified by an external auditor yearly. Types of accounts. Some corporations such as the Federal Airports Authority of Nigeria (FAAN) and Power Holding Company of Nigeria (PHCN) prepare the following accounts: A. Statement of financial performance. B. Statement of financial position. C. Statement of changes in net assets or equity. D. Cash flow statement. E. Notes. Hospital accounting. Hospitals undertake functions such as treating the sick, conducting research, and teaching. A major purpose of hospital accounting is to assist hospital administrators in the efficient and effective management of resources. Government hospital accounting has the following features: A. Fund accounting system is operated. B. The financial activities of hospitals are covered by budgeting and budgetary control procedures. C. Subsidiary and principal books of accounts are kept to facilitate the extraction of information. Such books include ledger accounts, journal, and DVEA book. D. An autonomous government hospital is required to prepare financial statements to determine proper stewardship in fund disbursement and general resource management as follows. 1. Statement of financial performance. These are prepared to show the surplus or deficit of the organization during a specified period of time, usually 1 year. They are extracted showing the comparative figures for the preceding year. 2. Statement of financial position. This is prepared to ascertain the financial strength of the hospital, as at the end of that period, the balance sheet is extracted from the comparative figures for the preceding year. 3. Cash flow statement. A cash flow statement is prepared to establish the hospital's sources of cash inflows and directions of outflows. The cash flow statement is very revealing of the liquidity preparedness in meeting short-term obligations. Preceding year's figures are disclosed as well for comparative analysis. 4. Notes to the accounts. These are modifiers or amplifiers accompanying the financial statements. They disclose information such as the hospital's accounting policy and method of depreciation which the final accounts do not supply. 5. Memorandum statement of account of capital fund. The statement shows the financial information of all the fixed assets and capital projects in progress as at a particular period. The standard accounting practice is to transfer any portion of the project completed in any financial year to the fixed assets account. Capital work in progress is determined based on valuer's certificates. The statement of capital fund contains only the financial information in respect of capital projects. Funds are transferable to augment the balance available in the capital fund. 6. Memorandum statement of account of recurrent funds. The statement highlights the financial information of all the recurrent items. These include unutilized grants for research, stocks, and debtors. Sources of revenue. The hospital generates revenue from various sources which include A. Capital subvention. This is the nature of contributions made by governments at intervals for the execution of capital projects of the hospital. B. Recurrent subvention. This is the amount contributed by governments at intervals for meeting recurrent expenditure. Examples are the personnel cost of staff, overhead costs, covering repairs of the facilities of the hospital, and purchase of drugs. C. Charges. This represents fees realized from the services rendered by the hospital. The charges include fees realized from the School of Nursing, X-ray, and laboratory facilities. D. Miscellaneous revenue. This includes revenue generated from sundry sources, examples of which are income from investments, reimbursements, disposal of assets, rent on property, and donations from philanthropic organizations and individuals. Development and property corporations. Some parastatals are established for the following aims and objectives. A. Constructing buildings for sale. B. Upgrading land for sale. C. Property ownership. D. Managing facilities on government estates. E. Maintenance of industrial estates. An example of such a corporation is the Lagos State Property Development Corporation. Main sources of income of corporations. These include A. Sale and rent of houses. B. Sale of land. C. Miscellaneous income, that is, dividends, interest on fixed deposits, accounts, etc. D. Surplus from property management. E. Professional service income, e.g., survey fees for private land. F. Government grants. G. Gifts and donations. The expenditure incurred by corporations include A. Payment of salaries. B. Cost of construction, e.g., drainage, building. C. Cost of land clearing. D. Interest on loan. E. Compositions made to those who are dispossessed of their landed property. Development and property accounting. Corporations which engage in the development of property prepare the following final accounts. A. General revenue account. It is in this account that the expenses relating to general development and estate management, as well as transfers to the various reserves, are consolidated. B. Property and permanent works capital account. The accounts are meant for transactions related to capital projects like land and buildings under construction, and for ultimate sale to the public. C. Capital works in project account. The account shows the projects of the corporation which are under construction and as valued by the professionals.
Yes.
D. General development expenses account. The account records the levies on capital works carried out on the agency's projects executed by the corporation or as agent of government to cover overheads incurred. On the expenditure side of the account are recorded such items as net expenditure from general income and expenditure accounts, and repayment of general purpose loan. Whatever balance is left in this account is transferred to general revenue account. E. General income and expenditure account. This account shows the surplus or deficit from development and administration, architects and surveyors services, fees, and such other income accruing from property, from housing property sale, grant, rent, improvements for sale, and other sources of income. The account is classified into two, namely 1. Estate management account, 2. Services on capital works account. The estate management account is to accommodate all relevant and incidental expenses. The second account is for services rendered on capital works for which general development expenses are charged. The general revenue expenditure after the direct charges on the relevant capital projects is apportioned between the general development expenses and income and expenditure accounts. Other direct expenses are allocated to the two accounts. With these, the profitability of each of the projects can be determined. Revenue items are treated on the same basis. The items identified in the income and expenditure account are 1. Net rent income receivable, that is, rent and service charges, less bad or doubtful debts. 2. Housing grants from government. 3. Investment income. 4. Amount appropriated to the grant redemption fund. 5. Gross surplus or deficit for the period before grants receivable and taxation. 6. Net surplus after taxation and deficit grants. 7. Transfers to or from reserves. Notes to the account have to review additional information on items such as depreciation and taxation. F. Property management account. The account records rent generated from operations, miscellaneous income received, and expenses incurred. G. Statement of financial position. This shows the financial strength of the corporation as at a particular date. It reports all items which are unique to the property and development sector with corresponding figures of the preceding year. A property development corporation's balance sheet should disclose the following items. 1. Movements on the grant redemption fund. 2. Deficit grants receivable. 3. Particulars of investment held. 4. Information on loans granted. 5. Information on loans made to the members of the management committee. Chapter Review. This chapter discusses the establishment of different types of corporations, the accounting policies, income receivable, expenditure incurred, and the peculiar reporting system.